Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, October 30th, 2025, and here is everything you need to know as the markets close for today. What a roller coaster day it has been on Dalal Street. The Sensex plunged 593 points, closing at 84,404, down 0.7%. The Nifty 50 fell 176 points to close at 25,878, also down 0.68%. Bank Nifty experienced significant selling pressure, dropping 354 points to settle at 58,031, a decline of 0.61%. The overarching theme today? Pure risk-off sentiment. The US Federal Reserve did cut rates by 25 basis points as widely anticipated. However, what rattled markets was Fed Chair Jerome Powell's hawkish commentary signaling that December rate cut expectations should be tempered. This single comment rippled across emerging markets, and India bore the brunt. Adding to the pressure, the rupee depreciated sharply by 48 paise to close at 88.70 against the US dollar, dragging down export-heavy stocks and adding to overall nervousness. Weak global cues and profit booking took center stage as traders liquidated positions across the board. Now, let's talk about the big movers today. On the loser side, the financial services and IT sectors took the hardest hits. Major Sensex losers included Bharti Airtel, PowerGrid, Tech Mahindra, Infosys, and Bajaj Finance. However, the bullish side wasn't completely dormant. L&T, Bharat Electronics, Ultratech, Maruti Suzuki and Adani Ports managed gains despite the downward pressure. In the mid-cap space, Sagility emerged as a standout performer, rallying strongly after releasing solid Q2 numbers. IIFL Finance also impressive, surging 5% to hit a 52-week high following revised ratings. From the broader universe, Canara Bank proved to be the sole PSU gainer, posting strong Q2 results that resonated well with investors. Meanwhile, Cipla reported Q2 profit of 1,351 crore, while Varun Beverages announced its foray into alcoholic beverages in Africa. On the technical front, Nifty 50 tested the critical 50-week resistance at 26,000 and couldn't sustain. The index hit an intraday low of 25,845 before closing at 25,878. Immediate support now sits at 25,900, with a stronger base near 25,800. Bank Nifty found resistance near 58,580, and support is positioned around 57,630. Sectoral casualties were widespread. Nifty Financial Services, IT, Auto, Metal, Pharma, Bank and Oil and Gas all ended in the red. In fact, all sectoral indices closed lower except for Nifty Realty, which managed a marginal positive. The Nifty MidCap 100 managed a marginal positive close with 0.1% gain, while Nifty SmallCap 100 slipped 0.1% into negative territory. Internationally, US President Trump signaled optimism about tariff negotiations, slashing tariffs on China and expressing confidence about signing a new trade deal soon. This development provided some relief to risk appetite globally, though it couldn't fully offset the Fed's hawkish stance by session end. Commodities saw mixed action today. MCX gold closed at 120,274 rupees per 10 grams, down 392 rupees. Silver ended at 146,925 rupees per kilogram, up 844 rupees or 0.58%, showing some relative resilience compared to gold. Crude oil declined, with November delivery futures on MCX falling 32 rupees to close at 5,340 rupees per barrel, reflecting weak spot demand globally. WTI crude traded near $60.19 per barrel, while Brent crude hovered around $64.62. Looking ahead to tomorrow's session, Nifty 50 faces a critical juncture. If the index sustains below 26,000 to 25,950, consolidation is likely with immediate support at 25,800 to 25,700. A breach below this zone could trigger a decline towards 25,500, which stands as crucial support. For bulls to regain confidence, a decisive move above 25,950 could restore upward momentum towards the earlier resistance of 26,000 and beyond, towards 26,300. Here's your actionable takeaway for tomorrow: patience is key. With the Fed's hawkish stance weighing on sentiment and technical levels under pressure, this is not a day to chase rallies. Wait for reversal signals near key support levels before initiating fresh longs. Watch the 26,000 zone closely. If this resistance cracks decisively, it sets the tone for December. For those holding positions, tighter stops around 25,800 are prudent. Send in your questions, your views, and your trades to our team. We'll be back tomorrow morning with an in-depth pre-market analysis to kickstart your trading day. Until then, keep those charts handy and your risk management tighter. Stay tuned, and we'll see you at the opening bell tomorrow. This is Prem signing off. Trade wisely, everyone.